On October 18th, China's National Bureau of Statistics released China's economy data for the third quarter, showing that the country's GDP grew by 4.9% compared to last year over the same period. This data is not as good as market expectations, and it is also far lower than the 18.3% and the 7.9% growth rates in the previous two quarters. In September, investment by real estate developers fell 3.5% year-on-year. Apartment unit sales fell 16.9%, and the floor area of new construction projects started in that month fell 13.5%. With the continued weakness of the real estate market and expectations of the government's imposing property tax, China's real estate stocks plunged yet again. So far, China's real estate stocks have generally fallen by about 20% this year. On October 15th, the CCP's media Qiushi magazine published Xi Jinping's speech on promoting common prosperity with the title Solidly Promoting Common Prosperity. The article mentioned property tax, saying that we must actively and steadily advance the legislation and reform of property tax and do a good job of piloting. But Xi's plan to raise taxes has been met with strong backlash from officials led by Deputy Premier Han Zheng, the Wall Street Journal said October 19th, citing sources familiar with the matter. Han said that Xi Jinping should not push the pilot property tax reform too extensively for the time being to avoid widespread influence. The initial proposal for tax collection in about 30 cities has been adjusted to about 10. CCP officials are still arguing about how to determine the pilot tax rate and whether to offer discounts or exempt areas. Property tax has been one of the controversial topics during the past 10 years. In fear that the property tax would jeopardize the real estate market, and there has been resistance from officials, it has been difficult for the authorities to implement the policy nationwide. This time, the official media published Xi Jinping's speech, indicating that the authorities are really going to start collecting the property taxes this time. According to the Chinese media Caixin.com, China promulgated the property tax interim regulations in 1986, imposing a property tax on owners of commercial and renting residential properties. In 2011, the authorities assigned Shanghai and Chongqing as pilot sites to levy property taxes on homeowners. At that time, some media reported that fiscal revenue of local governments in China relied heavily on the sale of land use rights, but as the amount of land available for sale decreases year by year, new taxes are needed to make up the revenue gap. So the property tax is one of the options. From the data below, we can see the extent of local government's reliance on land sales. A survey of 44 major cities across China shows that the ratio of revenue from selling land use rights to general public budget in 2020 is higher than 100% in 20 cities, with the highest being 180% in Foshan City and lower than 50% in only 5 cities. Another main reason is that China's economic growth has continued to slow down, leading to a sharp drop in fiscal revenue of local governments. The downturn in the real estate market has also affected the land sales. This has exacerbated the growing local debt for local governments that rely heavily on land finance. On October 5th, China Data Bank and Tencent Finance jointly published the City Debt Ratio Ranking. The results showed that most local governments in China are struggling to make ends meet, and the debt ratio is far above the warning line. The debt ratios of 85 cities in China exceeded 100% in 2020, and the ratios of 75 cities have doubled compared to 2019. The debt ratio of the top 10 cities all exceeded 500%. Guiyang government's debt ratio is as high as 929%, which is about 10 times higher than the risk warning line. Therefore, similar to the original intention of implementing the pilot property tax, the Xi Jinping administration needs to add new taxes and expand the scope of collection as a means to resolve the financial woes of local governments. Xi Jinping also emphasized in his speech to encourage hard work and innovation to get rich, preventing social class solidification, and to avoid involution and lying flat. Nowadays in China, due to the solidification of the social classes, it is almost impossible for young people to climb to a higher social class no matter how hard they work. They cannot see any hope, so they choose not to fall in love, not to get married, not to buy apartments, not to have children, and to live a very basic life. This is the so-called lying flatism, which contradicts Xi Jinping's Chinese dream on the ideological and spiritual level. The high housing prices that have lasted for many years have also contributed a lot to the popularization of lying flat among young people. The property tax has been described by the party media as a way to lower housing prices, rebalance, and redistribute income. It is even believed to be able to accurately target the wealthy class with multiple properties. This is in line with Xi Jinping's slogan of common prosperity, put forward at the beginning of this year. Therefore, Xi Jinping mentioned collecting property taxes at the Common Prosperity meeting. But in the current economic situation and the real estate industry facing such a difficult predicament, Xi Jinping's launch of the property taxes will undoubtedly worsen the situation of real estate companies, and whether it can help local governments get out of their debt remains unknown. Real estate tax is a comprehensive concept, which refers to all taxes that are directly related to the process of real estate economic activities. The tax burden related to real estate in China is already quite high. According to data from China's Finance Ministry, the 5 taxes of real estate, including real estate tax, urban land use tax, deed tax, farmland occupation tax, and land value added tax, accounts for more than 10% of the total official tax revenue. Ren Zhiqiang, a real estate developer who was sentenced to 18 years in prison by the authorities due to spreading an article on the internet, once revealed that 70% of China's housing prices are taxes and fees collected by the government. Let's take a look at the effect of the property tax that has been piloted for 10 years in Shanghai. The Shanghai model takes owners of multiple suites as the main target of levy, and the main goal is to curb high housing prices and speculation. The applicable tax rate is divided into 2 levels, 0.4% and 0.6%. However, the result is that Shanghai's housing price has been rising quickly, and the introduction of the property tax has not helped the local government to expand its tax base. According to the statistics of Shanghai tax revenue in 2021, released by the Shanghai Taxation Bureau in July, in the first half of this year, Shanghai's tax revenue totaled about 1 trillion RMB, of which the property tax revenue was only about 10.5 billion RMB, accounting for 1%. Recently, mainland media Financial Times wrote that the real estate tax coverage in Shanghai and Chongqing is too narrow, and the tax rates are too low, which did not generate much revenue for the local governments, nor did it help to curb the housing prices rising. The coverage of the new real estate tax pilot program will no doubt be expanded, and the tax rate will be increased significantly. According to international practice, the tax rate is generally between 0.5 to 3%. However, some insiders believe that the property tax is an unreasonable tax in China in terms of legal and taxation theory. Chinese owners only have 70 years of land using rights, and the apartment units are not private properties like in other countries. It is equivalent to owners just renting units from the government, therefore they should not be paying property taxes. In addition, there are many unfinished buildings in many areas of China with complete documents. Although they have not been handed over, they will be counted as the properties of the owners and are subjected to property tax, which is also very unreasonable. So, what are the consequences of imposing property taxes at this time? According to Song Hongwei from Tongce Research Institute, if the real estate tax is introduced at this time, a large amount of demand for change to the multi-home structure will disappear, which will further cool down the real estate market. The proportion of vacant apartment units will be even higher in first and second tier cities, as well as third and fourth tier cities with stronger economies. At the same time, it may also lead to a concentrated sell-off of pre-owned homes, which will suppress housing prices. Dr. Cheng Xiaonong, an economist who studies the Chinese economy, wrote an article in January this year analyzing the consequences of levying real estate taxes. He said that local governments would have a new source of fiscal revenue, but consumption in the overall economy would decrease as a result, leading to more depression in the service and manufacturing sectors. Cheng said, once the property tax is introduced, both for potential home buyers and homeowners, they will need to add a perennial property tax bill to their household financial budget. Not only those who own multiple units are worried, but even those who only own one, they'll be unsure if the local government will impose property taxes on them. In addition to homeowners, people who rent will also be greatly affected because landlords will add property taxes to their rents. He said the real reason for the CCP to levy property taxes is the decrease in revenue from land use rights sales. If the real estate industry has entered a depression, it means the end of land finance for local governments. And what the authorities care more about is that local governments are in an unresolved financial predicament. Therefore, precisely at the time when the plight of the real estate industry cannot be recovered, the real estate taxes will come. And now is the time when the real estate predicament is irrevocable, as analyzed by Dr. Cheng. Since the beginning of this year, Chinese real estate companies have continued to bring sensational news, and the pressure to sell apartments is also extending to land sales. In the third quarter, there was a boom of unsold auctions in residential land in various cities across the country, and the rate of unsold auctions hit a record high in the same period in history. In Guangzhou, where the title of Land King frequently appeared in the past, the rate of unsold auctions was as high as 52%. Beijing's unsold rate was as high as 60%, and many of Shanghai's prime plots were unsold or sold at reserve prices. Recently, concerns about the possible closure of Evergrande Group, the largest private real estate developer, have intensified. Evergrande had a debt of more than $305 billion and has failed to pay the interest of US dollar bonds on schedule for 3 consecutive times. Subsequently, some top real estate companies such as Sunex China Holdings, Fantasia, and Scenic Holdings continue to report debt defaults. The 3 red line policies that have caused this situation have not been loosened. For Chinese real estate developers who rely heavily on loan financing, more of them can only follow Evergrande's footsteps in the future. According to a CNN report, the market estimates that once Evergrande goes bankrupt, it will lead to tens of millions of vacant apartment units in China. As more real estate developers face the same problems, it is expected that the phenomenon of vacant buildings in China will only get worse in the coming years. The New York Times reports that Evergrande Real Estate has more than 1,000 developments in hundreds of cities in China, with as many as 1.6 million apartment units waiting to be completed. Chief Asia economist at Capital Economics Mark Williams estimates that there are still about 30 million unsold apartment units in China, enough to accommodate 80 million people, and about 100 million units that may have been sold but not yet occupied, enough to accommodate about 260 million people. That means the total vacant apartments have the capacity to accommodate as many as 340 million people. Many of these vacant units have formed ghost towns that will probably never be occupied. The property tax will make it more difficult for real estate developers to sell their units, and their capital chain will be more difficult to maintain. This will accelerate the collapse of real estate companies and will lead to more unfinished buildings and ghost towns. So can China's real estate tax reduce the gap between the rich and the poor and achieve common prosperity? According to the pilot operations in Shanghai and Chongqing, the property tax payers will be the so-called middle class who own more than one apartment unit and have a relatively high-end life. It's precisely the target of the CCP scavenging for wealth. But for those who unfortunately bought unfinished units, the property tax can only increase their burden. The main purpose of the collection of property taxes is to increase local government's revenue, which may allow officials to get more bonuses, but has no effect on increasing the income of ordinary people. The so-called common prosperity is nothing more than a shroud for the CCP to plunder the wealth from its people.